Welcome back. Time for the word on Wall Street. Top investors watching your money. Joining me right now is former Gartman letter editor Dennis Gartman and the Fitz-Gerald Group principal Keith Fitz-Gerald. Dennis, let me just say congrats on that mention from the Lindsay Group. Very kind comments about you and your resume and your history from Lindsay. Larry Lindsay, I don't know if you saw that, but I just wanted to say I did, and it was terrific. Futures are extending yesterday's gains this morning, rebounding from the lowest level since 2020 as Treasury yields pull back as well, Dennis. The market now expecting a 58% chance that the Fed raises rates another 75 basis points in November. What do you think this is about, this rally this morning and yesterday?
I think this is nothing more than a technical bounce, a dead cat bounce in a bear market that began in January of this year. We're probably going to take the S&P back to 3850, maybe 3900 before we run into resistance. You had yesterday a technical rebound, a reversal in both the DAX, the European stock market, the Japanese stock market, the Canadian stock market, and our stock market, having reached relatively oversold territory last week with put buying at historically extended levels. So you needed a bounce. You're getting a bounce. And I would tell people use this bounce to become less long. It's still a bear market in the long term. The Fed is going to tighten monetary policy. And I think the odds of a 75 basis point increase in the overnight Fed funds rate at the next FOMC meeting is much higher than 58%. I think it's closer to 100%. And we'll take the overnight Fed funds rate another 50 or 25 basis points higher in December. So use this strength into which to sell. It's a dead cat bounce and really nothing much more than that.
So, Dennis, you're selling into this rally. Keith, we wonder if any of this has to do with market expectations of some kind of a pivot. New York Federal Reserve President John Williams spoke on the Fed yesterday. He said this: tighter monetary policy has begun to cool demand and reduce inflationary pressures, but our job is not done yet. So, Keith, you also have all these worries about a credit problem in addition to a growth problem. Shares of Credit Suisse are rebounding this morning after selling off yesterday over investor fears and uncertainty over the bank's restructuring plans. The stock is down 60% year to date. And I wonder what your thoughts are, Keith. Is this a Lehman Brothers situation?
I got to tell you, Maria, having been through that and seen the global financial crisis coming in advance, if you recall, I can't help but shake those fears again. The fact that every one of these banks, but Credit Suisse in particular, is out ahead of it saying, well, we're restructuring, we're doing all these other things, we're well capitalized. You can change the headlines and the dates, and you've got almost the same playbook. So, yes, I'm extremely concerned because I think the cost of insuring the debt issuers is going up markedly. That gives me major, major concerns at this moment in time.
Yeah, and that's what Larry McDonald was talking about as well. Look, I don't know if there's any pivot coming from the balance sheet of the Fed. What are your thoughts? That's what Stephanie Pomboy told me yesterday, that she is expecting a pivot, not that the Fed stops raising rates, but that maybe they put aside the unwind of the balance sheet, just under $9 trillion, Keith.
Well, I got to tell you, I would love to have that. That's the narrative amongst traders. That's why we got such a vicious rally. I mean, technically speaking, stocks were stupid oversold coming into yesterday's session. That's still the case today. But to Dennis's point, is this a bounce or not? I'm inclined to be with Dennis on this one. There's still a long way to go. The Fed has got to continue to tighten. They caused this mess to begin with. They're going to cause the next three crises as they try to fix it.
And this is also global, Dennis, right? I mean, late last week, Larry McDonald is calling it the BOE's egg on face pivot next to the Brainerd speech. Lyle Brainerd on Friday opening the door to financial stability risk as an influence on the Federal Reserve's moves.
It's not just the Fed that's tightening monetary policy. It's everywhere around the world. They have no choice but to do so. They had all made the problems. They created the inflationary problems themselves by becoming far too stimulative over the course of the last decade. You talked about the Fed's balance sheet. The fact that they took it from $900 billion to $9 trillion was the fuel that sponsored the bull market, was the fuel that sponsored inflation, and they have no choice but to take it away. They said they're going to take $95 billion away for the next several years. I think they have to continue to do so. Otherwise, they lose all credibility. They've lost so much to begin with, and losing much more would be deleterious to the economy, deleterious to the country, and I think deleterious to the efficacy of the Federal Reserve Bank itself. So they have to stick to what they said they're going to do.
Hasn't the impact already been deleterious? Look at that ISM jobs outlook plunge, worse since 2008. And look at the housing market. Look at the demand destruction we've seen already. How much farther will the Fed take this economy into recession?
I think a lot farther. That's what I fear. They took it too far to begin with the expansionary policies of the last decade. They have no choice but to overreact on the other side. The Fed always overreacts. It overreacts on the upside. It overreacts on the downside. It's just the history of the institution.
Keith, final word. You think 2023 is going to be a tough year economically?
You know, economically, yes, but it's still a great opportunity to look for the right stocks. So even as bad as this gets, we're continuing to play offense. We're continuing to look for those great names because this is the time where history says you make your move if you want a future.
All right, we'll leave it there. Dennis Gartman and Keith Fitz-Gerald. Great to see you both, gentlemen. Thanks very much for the word on Wall Street.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below. And of course, click subscribe to keep up right here on YouTube or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.